What's up, guys? Welcome back to my channel. I just want to briefly talk about the S&P 500 and my thoughts surrounding the overall markets, given that we had a pretty volatile week surrounding, the Greenland tariffs. We got a gap down on Tuesday, and then we got the taco move, or the walk back on his tariffs the following day. So that kind of created like an island bottom here. And it's been a pretty volatile week despite a very shortened week. We didn't have Monday. We had Monday off as a holiday, so we didn't have any trading back then. But going into this full week, we have, earnings packed week. We have a majority of the Mag 7, including Apple, Meta, Tesla, and then we also have economic data. So I'm just gonna break down, what I see currently in, surrounding the chatter around markets, and I'm gonna give you my thoughts on what I think the markets are gonna do. So sit back, relax, and let's get right to it. So the S&P 500, we actually resolved this, this wedge here that's been bothering me for some time, and you can see that there wasn't any firepower left back at 695, 696. So we briefly came down on the tariff news, and that the tariff news was like pretty perfectly timed. I would say the market was waiting for a catalyst to send it lower, but look how, promptly we regained all these levels. So we came down to around 676, 675, and then we rebounded back sharply, and we're trading back around 690, 689 level. So this is where we've been stuck pretty much since like October of last year. So a lot of people are on FinTwit are very, very bearish on X, and I'm here to tell you that I don't think that the market looks bearish at all. And the reason why is because we have multiple catalysts next week. We have the Fed, which is expected to be dovish. We have multiple earnings from the Mag 7 that is expected to surprise. And I think a lot of people just take a look at this and they get very frustrated, especially, you know, since we didn't have any movement since last October. That's very understandable because, like, we've been chopping around sideways, and a lot of people are thinking that, wow, this is probably just going to crash. We're in a tank. And I beg to differ. And the reason why is because the MACD looks like it wants to curl higher. We got the reset of all these indicators, and if you look at the triple Qs, which is going to be the leading indicator in my view over the next few weeks, you can see that this is forming a wave 4 pattern, a symmetrical triangle that's looking to break out. And if people aren't seeing this, I don't know what to tell you, because look, we've been holding the 100 simple moving average on the daily time frame for, since November of last year, and every time we got a bounce off of it, and the most recently with the tariff news, we got the exact bounce off the 100 daily moving average. So you can see that we promptly reclaimed all these, moving averages on the 20, the 9, the 50, and this is forming somewhat of a symmetrical triangle. You can see that on the MACD, you can see that it wants to curl up. It wants to get bullish momentum on the daily time frame, having reset all this chop here. So in my view, I think the path of least resistance, looking at everything that's going on so far, is to the upside. If you look at the MAGS ETF, which consists of the Magnificent Seven, we got a pretty sharp breakdown recently off the tariff news, and the MAGS was showing weakness, but you can see like how it reclaimed the 9. It's struggling to get above the 20 and 50, which is imminent resistance so far, but I believe that once we get the cross on the MACD for a bullish momentum, since we haven't seen since pretty much uh early this year, essentially, I think that we're about to get an explosive move in the Magnificent Seven and in the triple Qs, which will drive the S&P 500 much higher. This is like pretty much picture perfect. You can look at this symmetrical triangle. It is very picture perfect off the April bottom lows. I think that this is very much likely to resolve higher. You look at the S&P 500. It's looking a little bit different than the Qs. We made a slight higher high here with the 696 above the 690 high in October. But I think that the Qs are just going to drag the market higher, in my opinion. You look at the IWM. IWM has pretty much been stealing the show the entire time. We got pretty much a solid 5% move off the early January bottom, essentially. and it's retracing a little bit, and I think that this should give way to a rotation back into some of these mega cap tech stocks and other parts of the overall stock market. And if you look at the VIX, we had the pretty much a picture perfect VIX spike that looks identical to the past spikes in October, November, and I think that this is primed to resolve lower. So, excuse me. And if if you just ask me, what does this picture look like? Does this picture look like it's about to break down? Or does it picture look like it's about to break out? And the triple Qs is the answer to this. So hope this answers your question on the overall markets. Despite a lot of people talking about, it's about to crash, Monday, they're about to bomb Iran. All this bullshit news that you hear about on X, on social media, tune on all that noise. When you're a trader, you just focus on what you believe, your charts. Don't get phased out by anything that you see online, right? Even when you're watching this video, do your own analysis. What are the charts telling you? The charts are telling you that the market wants a squeeze higher into February. Okay? Hope that helps. If you have any questions or comments, feel free to leave them down in the comment section below. Don't forget to subscribe to this channel. I make weekly updates like this for the S&P 500, the overall markets, and I'll see you guys in the next update. Peace.